So having a home is about love too, and it's about dreaming. It's like an American dream to have your own home. And so we're going to talk about assets today, what you have that might help you get a mortgage. We have an expert back with us, Mick Szoka. Nice to have you with us, Mick.
Good morning, how are you?
Good, Vice President of our Prescott branch of Union Home Mortgage.
That is correct.
All right, and you are helping people like ourselves get into homes.
Yeah, exactly. So you know, just to recap some of the other segments that we've done, we started talking about the four pieces of a mortgage.
Like a stool, you got to have four legs here.
Yep,
okay.
Exactly. So you have income, credit, assets, and collateral. And so today we're going to talk about assets.
Great. We need assets. We have all kinds of assets, but these certain assets you need for a home mortgage might be different than some. So how do assets fit into getting a mortgage, Mick?
So normally when we're talking about assets, we're talking about funds needed for down payment, funds needed for what is typically called closing costs. We really break it down more into closing costs and prepaids. But those are the costs of the actual hard money that
you
the
need
borrower
needs
up front to purchase a home. Now there's several different loan products out there that have varying requirements. You know, a veteran, a VA loan is a zero down payment. Wow. So there's no down payment.
But you need to have served in the military.
Exactly. Right.
Okay.
A USDA rule home is also a zero down payment, but those are properties outside of Prescott Valley.
Oh,
so you have conventional products. We have a couple conventional products that are 3% down, and then you have the FHA product, which is 3.5% down. Now, there's varying reasons why you may need, as you mentioned, a veteran. You need to be a veteran to do a VA loan, right?
Oh yeah.
And there's other aspects into what is the right product for the borrower in regards to all those products.
Because, you know, some people might have liquid assets, liquid cash, savings, whatever, but a lot of people, they don't have those. I mean, even if they have a lot of assets, but they're not liquid, they're property, they're things that aren't cash unless you sell them.
Exactly.
And so, you know, and I know, like land, you have to have, I don't know, 20% down sometimes.
Many times, because there aren't the different types of programs available to purchase land.
And even houses, sometimes 10%, just depends. But you have some great options. What are some other options for people who maybe don't have those that much in terms of liquid assets?
So as I mentioned, those funds there are the minimum down payment requirements.
Yeah.
I've gotten veterans in homes with zero money of their own, or borrowers into USDA products with zero. The 3% down conventional product is, you just need the 3%. You could get the other funds possibly from a gift from a family member. There's 401k programs that people may be in that allow for withdrawal funds for the purchase of a home.
And what about first-time home buyers? I think first-time home buyers can sometimes get a special deal.
Yeah, there are some state grants throughout the state. Those are sometimes income-driven as well, as are some of the other programs. So there's a lot of different options there.
All right. How about a time frame? Because if you decide you want a house, you find the perfect dream house that you love, and you're trying to get a loan, how much time do you have to come up with this money?
Yeah, so that's one of the issues and catches sometimes, because a lot of people come in and say, you know, I just came into $3,000 or whatever be the case, and that's fine. Right now, tax season, great source of funds for buying a home.
Oh.
So as long as a person can show where
if you're getting a refund.
If you're getting a refund, yeah, of course, which, what, 90-some% of people get a refund.
Yeah.
So if you can document where funds came from, that's fine. We just can't all of a sudden have funds show up. So point being is that we look back at a 6-month, or a 60-day period, 2-month period in bank statements, so forth, source of funds. And so you need to have those monies in there, unless it's being saved based on reoccurring payments such as your income, your wages, and you're building up. We can track that through that period of time too.
Okay, but you said, you made this key statement, like it can't just like show up. What about a gift? Those can kind of just show up, right?
Oh, absolutely. And so we document that differently. And that's the great thing about some of these programs is you only need a certain amount of money, such as a 3% conventional loan. You only need your 3% or 3.5% on an FHA loan. The rest of the money can come from a gift. We document that my father or my mom writing me a check, so forth. we
I
get
hate
that.
begging family members. It's really hard, but sometimes it's important, and it can be a gift at the time, even if you tell them, well, I'll pay you back later or something,
don't
I
know
guess.
anything about that.
I know. See, this is great. It's like, it's the lawyer-client privilege. Like, don't tell me that information. Where's Union Home Mortgage located, Mick, and how do people get information in depth? Because this is just kind of, you know, we just kind of get it out there so people have some idea of where they're going.
Yeah, so we're right here in Prescott, 325 West Gurley Street, Suite 104. Right downtown Prescott, right across from the famous Rosa's restaurant.
Wow, I tell you, that's always got a line, doesn't it?
Oh, yeah, yeah. And you can reach me at 928-220-3504.
Okay, so
I still
I
like
have,
phone calls.
I have another question, like on assets, because we've been talking liquid assets, but do you need other assets, like in terms of collateral assets and things like that, if you're looking at a loan, let's say?
So with mortgages, our next segment, we're gonna get into the collateral, which is really the home, right? That we're putting the mortgage against.
Because they're assets, but not listed as such, sort of?
Not necessarily as collateral. Now, some programs do require reserves, which, again, a 401k, something like that, even some life insurance policies can be deemed as reserves. And basically, reserves are, you know, a couple times, 2 or 3 times the amount of a monthly payment, so that you do have, we verify that you do have some cash left available, or cash that can be accessed to pay the mortgage if for some reason life happens.
You know, I heard one time that most of us are about 2 mortgage payments away from, you know, being homeless and that kind of thing. I mean, we kind of run on the edge sometimes.
That is absolutely true.
So I guess the reserves are, like you're saying, because I know, gosh, what was it, I hate to say, early 2000s, whatever, we did have like a big crash because people were getting loans that actually had no reserve, that really couldn't drop back on things that they had.
Correct.
If they had any trouble, if they lost a job, if anything went wrong in their lives.
Correct.
So I think there's a certain guarding against that now too.
Yeah, to a degree. Those requirements have increased a little bit.
Oh, okay.
Not significantly though, but the products have changed. What you're referring to is some of the products that were used didn't really account for those.
Good, so things are better. And what I hear you saying is that pretty much if you're a hardworking individual and you want a home, there are so many, there are programs out there that you can probably find a way to get into well, and you can have your own home.
Absolutely, and one of my greatest passions is helping people put together a plan. We talked about that before.
Yeah. Mick Szoka, get over there.
Yeah.
Union Home Mortgage. Information on the screen again of our own branch. Thank you so much, Mick Szoka.
Thank you, and I'd like to say happy Valentine's Day to my beautiful wife, my Valentine for life.
I love it. Thank you, Mick. Oh, I just love just in the air. Thanks.